It's entirely up to you guys, but you can just watch on Twitch if you want. I'm not gonna screen share on here. I know Twitch is a little bit delayed, but if you're looking to have the screen shared, it's not going to be on here. I'm just using the mic on here to transcribe notes. Okay, let's get back to here. So I did put some notes out today on Substack for those that were tuned in watching. We'll just wait for a few more people to join and then we can fully begin. I'd say today was, I wouldn't say it was pretty straightforward to be honest, but it was a little bit tricky only in the sense that the risk seemed a lot higher than it actually was, if that makes sense. And what I mean by that is it seemed like there was quite a bit of risk if around this range in here, especially because they had taken out the low, but I'll explain why that wasn't the case at all and why I figured actually we'll probably hold 65, 70, 71, 65, 78, and why I was saying that I think that they'll attempt to hold first, and specifically due to the fact that they never took out enough range back in here. So let's go back to overnight session. Last night was pretty straightforward. Yesterday's session was pretty straightforward. We already talked about stalling our 6661, sustaining 6622 in the later afternoon session, kind of keeping it pinnable within our box range. And this was very, very clean overnight price action, how they kind of kept this channel bound. Okay, so not too much movement, which is exactly what we wanted, is kind of to nest within the channel and the lower means or upper means and then upper zone area, ideally above 6609. So this was a very, very good hold of 6609. Why is 6609 important? Let's see who's actually paying attention, because this is on the report, but we're not using these areas for a random reason. Why is this area important? Typically, we'd want to hold 6614, 6618, since that's more of a neutral range. But in this specific scenario, why is 6609 important? Why would this be the range that we need to sustain to kind of come back to this area here? Because I feel like if you don't understand the basis of it, then you're going to struggle quite a bit. Why is that area important? Okay, and it was one of the first things that we documented. Exactly. So it's a huge area off the weekly range, weekly lows, our calculated spots. Yes. Okay, so keep that in the back of your mind so that when you're holding these ranges, that's what you're thinking about. Does that make sense? So this sustainment right here last night was basically them trying to sustain within that 256 point interval off our 6353 lows. Okay, and then they brought it back to 6622, 6632. You can kind of see that they struggled a little bit overnight, but looking back at this, do you see how clean this price action was last night, you guys? Like, look at this before the open this morning, and specifically during London session around like 3:30, 4 o'clock. Okay, this is extremely clean PA. Okay, PA off 6609, 6661 stalls, 6622 to 6632 consolidation. Our spots are extremely precise. And you can see once they finally came back and took out 6632 around 4 a.m. is when they finally took it back into the channel. And you can see how they started coming back, reassessing. Okay. One of the big factors I think for why we stalled is where we closed yesterday. So I noticed that when they took us into the close and into the open, like 66.50 is not bad, but remember how we said that anything closer to like 5.6, 5.8, this would have given us a bigger advantage in terms of like the kind of range that we could see. So like 66.50.75, 66.53. 66.53 is not bad. It's still not as great as like getting your 5.8 or 6.1, but I feel like this is partially why we had some slight reductions. Okay, and what I'm saying is in terms of like stalling 6.6. Okay, this is off the 66.50 close yesterday. Okay, off of 6.1, stalling 6.8. Do you guys understand the correlation here? This is pretty important that you guys understand where and why these reductions came into place. This is off of 5.8, okay? This is off of 5.8. So these were the calculated ranges for last night off of 66.58, failing to close around there, and then the reduction of closing around 66.50.5 or 66.53. Whereas had they maybe closed this closer to 6.1, it's quite a big difference in reductions, and that's what would have likely got us the 66.50, 66.71.50. Do you see the differentials here in terms of open, close, highs, lows? Okay, this is the 10.5 point differential between the close and highs, and it goes exactly back exactly to our 66, 68.50 and 66.71 areas. So I can confirm that those are for sure the overheads, even based on math. Like, we were already using those ranges as overheads, but now I can confirm that that's for sure the case. Then they came back and stalled 66. Then they came back and stalled, 66.58 back here, brought it down, kind of left it in the channel until they brought it a bit lower. You can see here again, they brought it right back to that 66.09, okay? They nested in this area for a little bit. And I think measuring how long they nested off 66.09 until the clearance, I think this is very important. So this is just some extra attention to detail, but it took them about 5 to 6 hours. That's quite a bit of time. What could this imply for real-time session today? If it took them that much time of nesting between 66.09 and beneath 66.32. So almost 6 hours nesting beneath our top of the zone at 66.32 and above 66.09. And we know that price action isn't going to extend or expand unless one end breaks. They'd have to break 66.09. Correct? Like beneath that, or they'd have to break above 66.32. Both ends opens up the case of getting back test to 6588, 6596, so on and so forth. The upside increases odds of getting a retest of like 66.51, and it should be roughly the same increments above or below. So for instance, if we're looking at it from this kind of aspect of things, sorry, one second. If we're looking at it from this sort of aspect of things, I would think that it's probably close to like 22 points in range, which makes sense because the market's been moving in roughly 44 point increments. So like 22 points makes total sense to me. Yesterday's entire session was 44 points. So a 22 point break being required makes sense because you basically have to break half the range. So either 22 points beneath or 22 points above. And I haven't even measured this yet, but I would imagine that gets you pretty close to the 66.55 area, okay? Which basically is going to be going back to these overnight highs. If we measure this based on exactly where they broke, okay, highs overnight, so for instance off 6632 and the actual overnight highs that occurred, it was roughly 26 points, okay? Do you guys see this? Like this range in here? Listen very closely because this is very important. Do you guys understand this concept? We're measuring off our 6632, basically like the zone break, okay, and the actual highs that occurred. We're not measuring off the potential highs or anything. We're measuring off the actual highs that occurred, which was right around this 66.59.25 area. And off 6632. It's around 26 to 27 points. Okay? I like using approximate ranges, which we have been using 22, 44 points, but if you want to measure the like exact ranges, okay, it's likely closer to the 27.25. Okay? Are you guys with me? That means that we have some calculated risk down to 65.82. Who's still paying attention? This is extremely detailed, but I think it's very, very important because this is what allows you to kind of get like a better grasp or understanding of why they trigger certain areas first. So in the back of my mind, I know that, okay, if and when they do break, there's definitely a probability that if they take this down the first time around, they probably can get it down to 66.82. Okay? 66.82 is a core area, but it's not a defined core area. Considering they stalled 6666, 6668, 6667, okay? And we had some calculated odds around 6671.5 based on like the increments that we looked at. We probably have a higher correlation of going back to like 6571, 6578, but that could be the first area that occurs. Or you could just extend the range. So instead of to 27 points, okay, that's probably closer to like a 35, 34 point metric. Okay, off the actual 6, 6, 6, 7 highs that occurred. You guys with me still? First thing that happened this morning, okay, they brought this, they pushed it up. This was a very clean 66.22 clearance. Really nice break above and like break into 6651. The stall at 6651, I think, is what stalled this from getting a bigger extension. They did a great job of holding 6632. I don't know if you guys saw this right here. This was a really good hold of the zone. Do you guys see this right here? Okay. And then that's what allowed for them to try pushing core ranges. And I think, honestly, them closing at 6650.5. Do you remember this yesterday? I don't want to overwhelm you guys, but do you remember yesterday how they closed at 6650.5? And I said that even like the end of day break, we had about 2.5 to 2 points in reductions. Do you guys remember this? I remember this from yesterday, but I want to see if you guys remember this. And the reason why they stalled was because they stalled 2.5 points at 3:58 p.m., which is what prevented us from closing above 66, 54, 55. I figured closing around 66.55, 66.56 would give us higher odds of tagging 7-1. Do you see how the reduction still came into play? I don't know if you guys see this. Very nice job on that. I want to get into the real-time stuff too because we have our long trade right now, but that is also another reason why I feel they likely stalled 6-7 versus getting to 6-8 or 7-1 or okay, so there's a lot of confluence with that there too. This morning they opened up at core ranges in the 6620s, which I figured was pretty good. I don't think we had a bad open, so I feel like this is what also allowed us, like 6629.50 open is pretty good. But do you see how, again, it was 3 points beneath or 2.5 points beneath 6632 this morning? Do you see that? Like this morning, okay, or 6632 minus 6629.50, you can see that's 2.5 points. So that reduction came back into play again. When we first took our short trade this morning, I mainly went short off the 6622 failure here, okay? And once I started noticing that they were heavily failing 6632, do you see this wick? This was evident. Do you guys see, looking at this now, why this was such a clear short trade this morning? But not a defined continued short. It was a very measured short. Where was this short measured to? What would your first short target be? Don't get this wrong. What would your first short target be, especially off 6632 stalls right here? And it was very clear that they stalled 6632. Like you can see the failure here. This is pretty clean. Okay, and you can see the failure of 6632. This is extremely easy to spot. You can also see how they struggled to hold 6609. Okay, so your risk immediately was extended this morning, right here and right here. What would your first major target be? And it's the spot that we discussed earlier. Do you see it? Look at where they landed. They landed right at that 65.82. That is insane. Okay, so that was super, super accurate, okay? What do they then fail to do right here? So I went long down here and I said, okay, I took a long off 65, 87, 88, and I said, okay, they have to clear 6596 and 6609. They kind of stalled a little bit. Okay, this was okay price action, but still like some risk. Where do you think they stalled back in here? And you guys have to try participating because I'm also in some trades, so I don't want to miss exits here. 6622. Okay, so I figured there's a pretty high chance that if they stall 6622 that they're going to take this lower, right? And it's going to prevent us from getting back to 6632 and so on and so forth. Plus, we already knew that based on max range, which is roughly 35 points based on like this 6632 break, okay, and 6609 right here, we still had some odds of getting down closer to like 6573, 6572, okay. If we look at it measured off like our full ranges of 6668.5, it's around 36.5 points. 36.5 would be like closer to 6572.5. Another way you can look at this is using like the same extension. So like back in here, when they basically stalled 60, I think it was 66.16. Okay, I would have preferred at least getting back over 66.22, 66.22.50. This told me that we could maybe see like a bit of an extended short, okay? And it doesn't have to be by a whole lot. If we look at it from like the same ranges that we looked at back in here this morning, like the 10.5 or 7.5 point range, specifically off the reduction off the close. Okay, so remember how we said 6658 subtract 6650.5 or 6661 subtract 6653, okay, like the closing ranges. A lot of these came into play back here, and off here. Okay, remember how we looked at 7.5, 5.5? Pay attention, guys. This can still have like the same sort of impact down here. And we already knew that, like, based off like where they actually triggered here, we already had a pretty good chance of getting at least 35.5 points, okay? Back beneath here, or beneath that 6609. Another way that you could measure this too is the ranges that actually occurred when they did break. So for instance, you see back in here when they breached, right here, or right here, like off this stick here, when they first failed, like right in here, it was like 6603 when they failed to hold 6609. I don't know if you guys can see that, but this is what I would have probably set, like, given as maybe like a max range. Like, I don't think I would have wanted to go much further than that. So there was a lot of confluence around 6571, 6572, 6573, this area here, okay? They were our core spots anyway, but I want you to see why it was also calculated off highs and off open and close. Okay, we're looking off highs, off open and close, and off our bigger overhead areas, which were very evident overheads. Like you can see 6632 was a very clear overhead. You can see 6632 was a very clear overhead here. You can see 6622 was a very clear failure right here. So it makes sense to apply our ranges anyway. That's where we ended up taking our second long. Back in here, I went long specifically off 6578. I kind of wanted to wait for some confirmation because I knew there was a tiny bit of risk still beneath around 65, 68. So I just wanted to make sure I wasn't in too too early, but I wanted to confirm that they had some odds of breaking this back up, and they did. This single stick off 6596 was pretty clean. And then they did a great job of holding the zone right here, if you guys can see that. Do you see this right here? So really nice zone hold. Back in here. Okay. And then they were able to bring it directly. Look at where they stalled. 6633. This was perfect this afternoon, okay? And this was right around our mid-session. So what do you think I was looking for mid-session? There's no way anyone should have traded this long bad today. Like this was so clean, okay? From highs to lows, open, close, structural base. Like, are you kidding? A 6588 hold, 6632 like a single stick break, 6622 break, 6609 hold. Like, this is insane. Do you see how? Do you see this, you guys, or no? I need you guys to see this on your own without me having to point out every single detail. I would say that that was a very, very, very successful hold, okay, of our spots. So I felt like it was worth selling half at 66.32 and kind of like leaving the rest just in case, because I wanted to see if they would essentially break down or break back up. There was still some slight breaches, but that was fine because I figured based on the dynamics of where they opened, where they stalled, where they kind of held right here, the differential right here, we could probably afford a little bit of like 2-3 point reductions, probably no more than that. And the theme has been around 2.5 to 3 points. Okay, so I was okay with them breaking just a little bit beneath, but not too much. And then I noticed that they stalled. Same thing. You can kind of see like the 2-3 point stall beneath 5.2, okay, or by 50, 51. And a lot of that made sense based on like the breaches right here. Overall, though, I think they still did fairly well in sustaining like the neutral ranges. Even back in here, I didn't do a second re-entry long. Like, I did some late day spy calls, but I still left my earlier position, okay, off of 6578, because I figured that we could get a good push into end of day, which is exactly what happened here, okay. Into the after hours, I still think that we have very good odds of tagging 6668, 6671, because our lows are correlated to highs, okay. Our open is correlated to highs. We had a core open, core lows, which can indicate what? Core highs. So 6668, 6671, I would say remain in play. I don't think that we had the full odds of getting there in real time today, mainly because of these slight breaches. Like 6596 is one of our calculated spots. This area in here, which is still a pretty decent area to hold, but I still think that these slight reductions that we had, and specifically around like just before 3, I feel like this right here is likely what prevented us from getting like the full range in real time. Does that make sense? Like, look. And it has to correlate back to like our 66, 69, 66, 71. So if we look at it just from a base reduction, it makes total sense that max range for real time would have been around 66, 56, 66, 58. That being said, we achieved the close that we wanted to achieve yesterday. Okay, what was the closing price I wanted to achieve yesterday? Okay, what closing price points did I really want to get yesterday? And I figured that that would give us the highest odds of tagging core ranges. Six, 6, 5, 5, 5, 6. Okay, so what could this imply for us into tomorrow, which we said already that the 8th had the highest odds? This is a progressive close. It was a reset. Okay, so today was nothing more than a reset of yesterday's action, okay? To pin the close in a better area that gives us higher odds. I did SPY. Someone was asking if I did SPY or SPX. Vinci, I did SPY so that I could cover in the after hours, because I figured that when they did these reductions in real time, they likely won't trigger these areas in the real time session, but they could easily trigger the retest of like 6668 and 6671 in the after hours, or at least like At least in like the first 15 of the close, like before the SPY session closes. Did you guys catch the long into the close? I really wanted to go over like the end of day, like exact details, but I wanted to cover what happened in real time. Maybe I should have streamed a bit earlier, but I really wanted you guys to see like how they had a very good job of cleaning this. And this is a very perfect hold. Like, do you see how nicely they held 6632 right here? So this long right here was super clean. And these single sticks, I feel like they did reduce range too because of stalling and going back to 6622. Why, Crazer? The PA was very constructive, but this right here, like, I'm not saying it was a massive reduction, but I feel like this also factored in a role. Like, it wasn't a whole lot, but I feel like had they not back tested this one more time before like the final 15, then we likely had better odds of, you know, capturing a little bit more range here in the real-time session, at least back to like 66, 60, 62, 63, based off where they stalled the actual real-time highs. Do you see what I'm saying? Like, I think had they not broken down 12 to 13 points right here, we could have triggered 66, 66 or 66, 67 in the real-time session. What part of it wasn't clear though? Like, does watching this stream make it extremely clear? Like, I hope after watching this, it would be very clear, the setup into the close. Because that was the setup that we were looking for. We had some odds of getting back to 66.44 earlier this afternoon, which reduced odds. But keeping it pinnable, I would say, would be if they left it beneath 6632, if that makes sense. Like, and specifically before like the final 15. So I feel like them breaking this up before the final half hour, this really helped, I guess, give like a better push. Plus, they also bounced off 6596. Freezer. Like, 6596 is one of our big spots. That was the first area that we had to retrace to get back to 6609. Right? Like, our structure, I feel like, was very clear. This today, like this. Okay, 6596, 6609, 6622, 6632, 6644, 6651, etc. Like, I feel like if you watch it based on that structure, it could have gone either way if they stalled. So, Crazier, you're not wrong. They could have made this a pinnable afternoon if they failed 6622 right here. Do you see what I'm saying? Like, you're not wrong about that. If they had failed 6622 right here, they could have definitely made this pinnable. And it's specifically because they brought it back to 6596. But my thoughts are, because of this like reduction right here of like 13 points, okay, and then this reduction right here of like roughly 12, 13 points, like, do you see what I'm saying? Like, these here, I feel like this is what caused a lot of the back and forth, okay, like this right here. And that's what could have allowed for like breaks back down to the bottom of the zone, closer to like down here, or like back to those previous lows. Do you see what I'm saying? Even like the breaks right here, like they were almost identical. Like, I don't know if you can see this. It was like roughly 10 to 12 points, but here, okay, off like 2-2, 3-2, whatever, 3-3, and here. Do you see it? Like, look at where they stalled right here. Do you see that? So taking out 664445 was huge. I don't know if that helps you understand why I was looking at 6644, but that's why. It's the same 12-point break off 6632, I guess. Like this area here, like 6633. Or if you measure off the actual candle that took place, it's closer to like 6646, 6651. Okay, that's why I figured that, okay, there's a possibility that if they keep it stuck beneath here, which, do you see how they kind of kept it stuck beneath 6652? Then it could reduce the range a little bit by 12 points. And then they pushed it final minute at 12:59 above that 5-2 spot. Do you see this right here? And I think that in itself is likely what caused, let me delete this. I think that in itself right here is what caused them to keep it around the 663644 into the close, but beneath 5-2, okay? But also why because of them breaking at 59, this is what could allow for this area in here, 6664 off the actual close, 6667.75. Do you see what I'm saying? And that's exactly where our highs are. So that's why I think we have some odds in the after hours to trigger 66, 66, 67, 68 retest. Okay, off the actual high, it gets us to our 7172. It's perfect PA, but I know it might not seem as clean or directional, but the ranges definitely line up and the price action makes sense. So I would say maybe back in here could have been a bit tricky. Okay. I still had my long, which I guess made it a little bit easier for me because I didn't do the second long here. I did it here. But I think the 6622 long, this made total sense because they triggered 6644 first. Had they not triggered 6644 first and failed 6632, then you're absolutely right. That could have gone either way. But I feel like them breaking this range up because, look, they either had a chance to come back to 8482 or they had a chance to break 12 points above 3-2, and they did this first. Does that make sense? Like this was the green light, this would have been the red light. Okay, I feel like had they not done that, then it would have probably broken beneath here. Okay, or another thing they could have done is they could have broken here, but if they failed to stay here, listen very closely, Creaser, because obviously trading's hard. But okay, this gave it the green light, but not in a full break. Okay, so let's make this maybe blue. Okay, had they failed to hold 6622, especially before the final 15, I think that's what would have allowed for that pinnable price action. Okay, so because we always have to have a neutral scenario too, that's what would have made it pinnable. Okay, back to 6609, 6622. Do you see what I'm saying? Okay, whereas like the range that they tested it in was kind of like the area that we were playing with fire. Okay, and it makes sense because that's a bear zone and bear neutral. Like it was like right in between. So there could have been some risk to go back to 666588 if they didn't hold right here. Instead they brought it up. There could have been some risk to take it back to 6609, which might have not been the worst case scenario, but probably would have made us flat once again, which was, remember in the report in the beginning of the week, I said, if they open us around 6609, it's not the worst case scenario, but probably gives us the highest odds of not being progressive to start the week. Like it gives us the odds of staying flat all week. Do you see what, remember this? Okay. So if they had done something like that and pinned us around here, that probably would have really reduced our odds of getting any breaks tomorrow. It would have kept this neutral back and forth price action at a very, very high odd. Okay, so think of it in that sense of things. So like, but once we kind of came and cleared this area here, I think that's kind of where we're back in like a bull kind of territory, and it just basically takes us to like our 66, 57, 58, 61 basically, and this is more progressive now. Plus, don't forget, what was the first thing I said this morning? And I posted it on Substack. What was the first thing I said this morning? We held core ranges. We opened at a core range. we likely still have odds to go core to core. Okay. Is 6665258 mid core? You can't forget that these areas are still core ranges. They're mid core ranges, okay? And the most simple way of understanding why they didn't give us like the full range is, I honestly think, because they failed 6609. Had they not done this, okay, back in here, then for sure this would have cleared in real time. Like I know that for a fact. Like had they not stalled there, they would have at least cleared 6664. Okay, that would have been our first predicament. Like had they not cleared here, had they not failed beneath 6622, which would have been the best case scenario. So let's go with 24 points. Okay, they would have triggered 6676. And if you're thinking about it, we're measuring off the 359 sticks, but those are also yesterday's closing points and opening points, so it makes total sense. Okay, so my thoughts would be that if they had held closer to here, okay, this afternoon, and we didn't see this breakdown right here and they broke up, we probably would have triggered not only core but probably this range in here. This would have given us the highest odds of getting 6688 reclaim. Okay, if they had instead held closer to here, okay, like 6609, this area here, we likely would have not back tested here, okay, and we likely would have held 6632 instead and likely pushed these core ranges, so like 6671, 78. Okay, I want you guys to see the differences. Does that make sense? Had they still broke here, okay, but not broken back to 2-2, they still could have triggered 6667, okay, or 7-1. I don't know if they could have gotten the full range. A lot of it's kind of relative to your PA. So, but in my opinion, even if you miss this area here, there's no way you should have missed a 6622 or 32 long, or have understood why this was constructive price action, if that makes sense. But now, do you understand why I said they could turn it pinnable earlier if they don't clear 6632 and 22? Especially if they fail 6622 and 09? Kind of like what we talked about, like if they would have done that and not cleared here, they would have likely kept it pinnable between the zone. It would have been basically a perfect zone bound scenario. And the ranges add up like that to being a zone bound scenario, okay? Like think about it. These areas here, if they did not clear, okay, or if they cleared but then didn't really take it too high, this easily would have been a zone bound scenario. What would a zone bound scenario entail? Obviously staying in the zone, which would be between like the 6580s and beneath 6632. Does that make sense, you guys? Like I want you guys to understand, like you have to know logic so that you have an idea of like which trade has a better odds. So I knew that we had odds of getting stuck zone bound when they failed back in here to clear. Remember at like remember I said there was odds at 222, 224? Did you see what happened at 224? And 230? They failed 3132. Okay, so this is where I was like, okay, they could definitely continue the downside on this, but I think sustaining 9.6 it wasn't the best move, but it was a good move to at least keep it within range, okay? But the bigger move was them breaking 3.2 and 4.4 right here. This is what allowed them to keep pushing, because they could have technically tested 3.2, but still kept it zone bound. It was this little 12-point extension above or break above, okay? Are you looking? That allowed them to give us this extra move. Otherwise, they would have kept this within the zone. I don't think we would have triggered above these ranges here, or they would have likely really reduced odds of getting much higher than like 6644 or something like that. This is what allowed for like those end of day breaks. Okay? closer to like the 5.8, 5.9 spots. So I don't think that analysis was wrong. I think it's just the way that you look at it. So we knew that we had to break 6644 as a condition. We knew if we broke it here, however, we had higher odds of getting to here in real time. Which, when you look at this, it should make sense like that. Because you're basically taking this whole reduction, which I think is like almost 34 points. That's crazy that it's 35.75. Considering that that was the 35.75 here off highs. Look at that. That is insane. Look at this. Do you see that? It's literally the exact same range off 3.2. Okay? And the range that they reduced us by beneath 3.2. That's crazy. That is such a calculated hold. So that's exactly what I'm getting at, is they would have easily tested real-time highs, okay, or highs in real time had they not broken down at that period. This was the expansion period, if that makes sense. That's why I said 222 was crucial. And look, I swear, look at where they're stalling. Do you see this? Look off the 222, 224 sticks. Look at where they're stalling. If we do the exact range of 35.75, okay, look. Isn't that crazy? These were my calculated time intervals this afternoon for whoever wasn't around. Okay, it was around this period here. If we measure the stall to where they actually triggered lows, it was 30, okay, 35.5, 35.75. We already measured off these areas earlier anyway because there are calculated spots, but off of previous high. I just want to show you guys. And off our 2-2 spot. Okay. That is pretty insane. Okay. And if we look at this off here, you can't tell me that that's not crazy. That is insane. In my opinion, that's pretty accurate. So I know for a fact, I know 1001% that if they had cleared at my calculated time intervals at like 222, 224, we would have for sure seen 66, 68 in real time today. Okay? But I know that because they clear these ranges around here, we could still trigger that in the after hour session. And that's why I said I think they could do this by 4:15, which they did. Isn't that crazy? Vinci, where are you? That's why I did SPY. Do you see the 4:15 break? They were assholes about it though and did it right after, but that's partially why I did SPY, not SPX. Because I figured that they'll probably break it during the SPY session, closing at 4:15, based on how they traded this. So, but I had a sell order in at right at 4:15. But do you see what I'm saying? Isn't that insane though? So, but if we had cleared here at our calculated time intervals, we would have had like such a great afternoon. I swear, like right in here, like right at 222, when I was saying like, oh, we have some pretty good odds right here to get a clearance break. That would have given us a way better odd of getting like this whole. I could see how they would have done this. I swear, if you take like the exact. This is a good practice too, guys. If you want to mock potential PA, okay, I think it's a really good way of like looking at trades, okay? So kind of like this, okay? And I did have some odds around like the 240, 236 period, but just if you want to like just mock this, okay? So like let's go with 10.75 points here. Just to see how the PA could have traded, okay? Does that make sense? Like if you look at it like this, like I feel like sometimes this gives you like really good practice, or like the bigger stick breaks. So obviously the liquidity breaks that came in were at 240 and 241, right? Let me make these not extended though, so it's a bit easier. Hold on. Okay, so like this one here could be like 14 and a half points, 13 points. Okay, off here. Like off this range in here. Why is that so hard to see? This right here. Okay. Here, here. Do you see that? That would have been the PA. And it's crazy because these are probably the spots that they started stalling around. Like right in here. Because that likely would have been like the range that we would have seen. So it's clear that like a 16, 17 point break right here would have probably been the bigger structural breaks, like had they cleared this properly. So kind of closer to like 4-8. And that, look, that's where 4-8 comes into play. And 4-5. So do you understand what I'm like saying? Like in terms of like how you can try to like what's the word for that? Like try to basically like mock how they could have traded this afternoon had they cleared it like on time or like around those points in time. And it doesn't take away the probability for the after hours or real time session, but it could be limited based on how much time you have left. Okay, so like stalling closer to these ranges in here as opposed to like maybe the full range, which is the 35 points. Okay, which would be here. Isn't that crazy? So, and I feel like practicing these sorts of like theories is important because it helps you understand like both ends of the trade. Because I think understanding both ends of the trade is important. Like I don't think that you should only look at things like in one way. It's good to kind of see like, okay, well, if this is the range that they had initially done, it's probably good to see how this would have played out. So based on this, had they come back and instead cleared, then I could say, okay, then they for sure would have tested around here. Okay, because that would have been these areas here. Do you see what I'm saying? Okay, that's around the 4-2, 4-3, 4-4. Had they continued to clear, then they would have tested around here. Okay, maybe stalled around 4-8, 4-6. Okay, and if they really pushed, then they would have tested around here. Okay, and the extended period, this is also really cool because I think the duration of time is important. So like when they really, and look, this is crazy because this is when they failed 6609. Look, when they started failing 6609, that's when it expanded. Do you see the expansion sticks here? That was the 6609 failure. Okay, so this duration of time and then to get it back to 6609 took approximately 21 to 22 minutes. Are you guys with me still? I'm going to go a little bit advanced, but I just want you guys, like those that actually care to learn. Okay, so you could start using like the 22-minute intervals here to 21-minute intervals. So I know for a fact that we probably have to start holding around these points in the day. So Creaser, listen, okay? If we want to measure the intervals of how long it took to get back to 3-2 or 2-2, it was approximately 25 minutes, and that's on this bar right here, okay? This bar right here. If we want to measure the actual stalls of our 4-4, 4-6, okay, so how many minutes is this? 26 to 27 to 20. Yeah, right around here, right? This is 27. Okay, so look, 25, 26, 27. Do you see this? Look, off 6609 clearance, these were the earliest odds of this thing breaking. And that's the time that this really had to hold. Okay, you do not want this to have started failing around these time intervals right here. Do you see this? Okay, I was showing you guys price, I'm showing you guys time now. So try your best to pay attention. And you can keep measuring off the 25-minute intervals on the clearance breaks if you want, based on when they actually broke. So we definitely had some odds extremely high odds because this is linked to that 319 period right here. Okay. This right here. And then this here was linked to that high. That stick break, you guys, at 345 was linked to that 320 stick. Isn't that crazy? So it's not just the price, it's the time. 319, 320 was linked to 345. That's crazy. Okay? Your max cutoff would have for sure been that 27-minute interval that we just talked about. Because we said that was 27 minutes, right? 27 minutes was the max between this period here, around the time they failed 6609. Okay? And the time it took to clear back basically to these highs. So you're working within a 22, 25, 27-minute interval. Okay? I would say 27 minutes is probably the most accurate, and that's when you had these stick breaks, which is honestly pretty insane if you ask me, because it took us right back to our 6-6, 3-2, 4-4, 5-2, 5-5 breaks. But that is a reason why they likely didn't really have extremely high odds of breaking these ranges in real time. But this is also why they likely had odds, like, so if we look at it from like the stalled highs, like to continue here in the after hour session. Okay? So that's a time theory for you guys, but this isn't based on price. So that's time, price. Okay? So my conditions at this time of day, okay, would have been that we have to hold 66.32. My conditions at this time of day, okay, especially with this kind of a range break, would have been that we had to test 6644, 6648. Okay, and sustain. This was a sustainment period. My conditions at this time of day, had we already broken 6648, would have been to clear 6652, 56. Do you see what I'm saying? On these stick breaks, my conditions at this time of day would have been to test 66.68. So we had odds, had they done this in the inverse, to have tested around this time of day. And I think that trying to understand that from, like, trying to see things that are not visible is important. And look, this is probably that 26. It is. It's that 26 to 27 point increments that we looked at earlier, which is pretty insane because that was the range that we talked about, right? From the failures of 2-2 was around 26 to 27 points. That's pretty insane. So in other words, these could have been some of the odds that we could have seen in real time today. Do you see it? The odds of 6-8, 70, specifically off our measured spots. Okay, off of here 7-2, off of here 7-4, off of here 7-9, off of here 8-4. Do you see how they would have maybe had odds of triggering our core to core areas? And core to core areas doesn't just stall at those spots. Like we did mention earlier, that I mentioned it on Substack, that those areas would be between 8-3, 8-4. And if you forgot already, remember the previous weeks, the range that it kept getting stuck was between 5-6 and 8-4. But do you see how this would have opened up the window for breaks of 5-6 to 8-4? Kind of like how we saw back in March. I swear, time and price is just repetitive. Look. That would have been opening up the same window. 66.56, 66.84. Isn't that crazy when you look at it from that sense of things? Had they cleared. So that could have easily put those areas in play. And if you read the chat earlier, pretty sure earlier this morning, Yes, in the chat on Substack. Go back to Substack this morning. These are the spots that we said we could easily trigger back to. I don't know if you guys can see this, but can you guys see the center screen here? Or not yet? Do you see that? Okay. This is the range that was ideal to clear, sustain, to get to core. That's what would have triggered 7-1, 7-8, 8-4. And now you're seeing it when we're using our actual ranges that occurred, okay? The timing aspect of it, had they cleared, how it nets to 8-4. I know this is extremely detailed session, but I think it's good to understand like how you can meet certain price points, how you met certain price points, how you could have met certain price points, and how it's also still correlated to time. Isn't that crazy? So I think we actually could have some odds if they clear 6-8 and 7-1 to get to 7-2, 7-6, 8-4. So our plan kind of remains the same. Overnight plan makes total sense. The 8th had the highest odds of getting back to the zone, correct? So in order to do that, we're basically resetting our sessions that we failed on. What days were those? What day was that when we failed at March, what, 23rd? These days here? Isn't that when we failed to get the clearance breaks of 4-8? See, and look at that. That's crazy, you guys, because that was the exact same analysis that we had on the 23rd of staying stuck within that range, okay, of between 3-2 and 8-4, okay? Remember? I don't know if you guys remember this. I feel like you guys have terrible memories sometimes, but that was our 6-7-4-8 failure date, okay? So, and the 23rd is linked to the 8th. So they're trying their best to set this up for tomorrow to give us our zone retest, or at least get us back to this area here, which is pretty impressive, honestly, if you ask me. So overnight conditions, I think, are pretty straightforward. In order for us to increase our odds and keep our odds for our 2-day flag to keep breaking, which, by the way, the 2-day flag is now valid due to taking out highs. So we took out these highs, so this is valid, by the way. That was another reason why I think it was important that they try taking out these ranges here. That flips tomorrow. The 3-day also flips over tomorrow, and it took off these structures, so that makes it a lot better in terms of price. If you look at it from a very base approach, our 3-day structures are also positioned around 8-4, 8-5. Do you see this? And 7-1. All of it kind of makes sense, especially based on like today's real-time calculated ranges. The 4-day runs until the 10th, I think we said. We're really watching the 6-day, since this one was what was more in line with flipping over tomorrow in the star pattern. So this obviously is still not fully invalidated or engulfed, but I still think that this could be a really nice extended frame, and specifically off our 10-day that we're trying our absolute best to negate, okay? We're trying really, really hard to bullish engulf on this. I think that 2-day setting up right now is giving us a decent shot. What do you guys think? This is off the weekly report too, but I feel like that this is giving us a decent shot. So we have the earliest odds of retesting our ranges. By our ranges, I mean 6-7-2-2, 6-7-4-4, 6-7-3-8, 6-7-4-8 as early as tomorrow. If they're able to do that as early as tomorrow, we have pretty good odds of basically getting back to our 6-7-7-1, 6-7-7-4, 6-7-7-8, potentially even 6-7-8-8, and retesting 67-14 with odds of 6-7-2-2. The only way that could be possible is if they want to engulf the 10-day time frame before the 14th. And so in order to do that, I think that puts a lot of pressure on the 8th and 9th. Okay, because the final trading day for this would be Monday. So we only have 1, 2, 3, 4 sessions left. But that's not very much range. We've already basically hit, let's see. We have already hit almost 75% of that range. And tomorrow is the mid frame. So basically retesting 66.99, 6,700 would trigger 75% of the way of us being engulfed. Is 66979698 an important area for us? Aside from this engulfing 75% break. Yes, it is. 6696 is correlated to highs. 6696 is correlated to half the range of 6523 previous lows or higher lows. Okay? Don't forget these things. Back in here. Remember? Okay? Do you see the correlations? So it's not only a 75% break, which really increases odds, it's also the 173 point mark. Just in case you guys forgot. It's also the 346 point break off current lows, which if we double that, takes us back to highs. And I'm going to make sure you guys don't forget this, because you guys have to understand. So right now, current structure is in line that if they bring this back to 66, 96, 98 by the 8th, okay, that is increasing our probability of not only engulfing before the 14th and fully negating that 10-day bear flag. I'm giving us all scenarios, okay? But that also gives us an odd of potentially getting back to all-time highs. Okay, which I think would be a really big shock to the market. So maybe we could start expecting some headlines to come out if that's the case. Obviously, it's still a little too early to tell, but so far, our weekly plan, you guys, has been perfect. We didn't fail core areas at 65.70s. We tested and stayed not inside range, but within a tighter range, beneath 667178, but above 6588, which is perfect. So we stayed zone core to zone to channel to means bound. We are closing at perfect price points today ahead of the 8th. We've increased our odds of retesting 6720s by the 8th and 6696 by the 8th. So 6696 by the 8th is crucial, okay? This is what's going to give us our odds of getting back to here, 6820s, and potentially back to here as early as the, I would say as early as the 14th, but that's kind of pushing it. But maybe, probably more realistically, we could use that 2-day time frame to count our bars. So, and I put this on the report. So this flips tomorrow. That's already the first bar. 2. Okay, a lot of this is going to be relative to just how much range. So if we only get to like 6750s this week, which was my weekly targets, then probably not as high of odds. But if they were to push 6820s as early as this week, then our odds increase. Does that make sense? To get to those ranges by the 13th, 14th. I feel like that's kind of pushing it. I feel like it's maybe probably closer to like these ranges in here. So 1, 2, 3, 4. Okay, a lot of this is going to depend. And normally your bigger break is the same range break that you get by the 4th or 3rd bar based on your flagpole. So 1, 2, 3, 4. 1, 2, 3. So your 3rd bar period is going to be between the 16th and 20th. So, and that makes sense then. So 1, 2, 3, 4. That 4th bar is the 20th through the 22nd. Do you think it's realistic that they could do that by the 22nd? Your range is typically the range of your bar. Our bar is roughly 300 points. From open to close, it's 232 to 268 points. 232 to 264 points. What do you guys think? So max range would be 300 points. I just want to see what these areas give us, okay, off these closing points. So 60, that would give us an odd of getting back to 69.20 basically. And 69.50s. So I don't think my analysis is wrong. On a more, and usually when you break these ranges, like the pull range, you typically break the pull by 25%. That's like a common rule that I have. Okay, if we break this off of these types of intervals, then we probably have higher odds around like 6.884. Okay, you can see that 6.688 or 6.888. 6822, 6922. So there's a lot of confluence, you guys, around the 6924, 19, 6924 area. Okay. If they gave us the extended break, which as we know is typically a 25% extension, and if it's easier for you guys to use extensions, then just do that. You could do it off this 2-bar flag. Okay. So using just a fib, you can do it off high to low, open to close. I usually like doing it off like open close first, just to kind of see like where the overhead is. So it's pretty obvious that the overhead right now is currently at 6675. Like that makes this pretty clear. But okay, and you can kind of see. But if you're doing it off high to low, it should be around these areas here, like 69.19. Okay, if you do the 25% extension, then it would be around heading back to those highs. And the reason I'm saying that is because if we do it off like high to high, it should take you back to like 70.29, 70.30. Okay, so if you want to do it from a math perspective, then you could just take the range, so 300 points divided by 4. 300 points divided by 4, 75 times 5, that would give you the extra 25%, which would be 375 points in range. Okay? There's 25% extension off the 3-bar pole flag. Okay? Does that make sense? And to me, that makes sense, because usually when we extend 346 points, we usually get 375 to 380, right? So even from like a base range, that's pretty cool that that's what that would be. So let's just do something real quick. I want to measure 346 off this pole, which we know right now is our 66.96. And I want to measure to make sure that that does align with like our previous highs, and it does. I also want to measure the extension, which would be 375 points, we said, right? And I want to see if that takes us to our 67.20s, which it does. That's insane. And 6728 is extremely calculated. So that's pretty crazy that that would be the calculated spot. And that's off lows. 6758 is off close, which 6758 is our calculated spot from the report if you go back and read it. Okay, and then off closing points closer to 6994. Off the high, it should be around that 6729. Okay. I know it's a lot to consume, you guys, which is why I wanted to have the bot transcribe this, but we're in a really interesting position right now for the market. And if we end up getting a break back to all-time highs, no one in here should be missing that. everyone in here should be more than aware. But now it's our job to pay very, 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 very close attention to detail, right? So we're paying very close and high attention to detail to see just what they do here. Look at these. See? Look. 6773, 6771 breaks. This is so obvious. We've only got 10-15 minutes left till the close. I think any pins around core areas would be obviously the best case scenario. If they could pin us around 6871, we're really in a good position to get back to 6820. 6670s pinning is extremely good for odds of 6720s and 6750s targets for the week, with the 8th and 9th being the highest odds. Okay, everyone should feel fairly confident. This is also a 66 point break, by the way, and 68 point break off these lows. So that's another way of looking at it, using like the base concepts back in here, especially for like real time. Usually core breaks are always around those 70, 71 point intervals, but I would bet anything that right now this is getting very close to like hitting our 103, 107. Okay, so don't forget that core ranges are usually these spots. So that is another way that you can think about this. If you want to just make it, forget all the math and just have it completely dumbed down, then the 07 areas, 6680, the 110 area is going to be our 668382. 115 area gets us right to the zone, right at 668788 on that kind of core-to-core break. Okay, I'm going to sign off, you guys. We'll see where they end up pinning this. I think anything above 6666, 6668, ideally 6671 pins would be amazing for us heading into tomorrow. Okay, I plan on doing earlier streams tomorrow, so, and I do plan on being around for the majority of the session. And I'll put these notes transcribed tonight, because I think that this is, I have this all recorded so I can put it into like a PDF file, because obviously rewatching a 2-hour stream is kind of a lot to take in, but, or an hour and a half of streaming. But do you see how everything is kind of just aligned back to another? So honestly, if we end up getting a 2-day continuation, that is going to be so much fun to trade. So I'm very excited for tomorrow and for Thursday. Thank you so much. I will see you guys tomorrow.